Actually, generally we are reading right now the impact of the tight monetary policy. Generally, I'm explaining these. What is a monetary policy? Monetary policy is nothing but it's one of the mechanism under which the RBI control the inflation, rising the interest rate, or it's one of the mechanism to control the inflation. Okay, what is the impact of tight of the monetary policy? Monetary policy is nothing but it's reduce the economic growth. It's first one impact, and second impact is nothing but it's lower the inflation. First of all, it will reduce the economic growth, and it will increase the unemployment. First, it will reduce the economic growth and lower the inflation and higher the unemployment. Nothing but central bank is RBI will implement the tight monetary policy to cool down overheating of the economy or combating the higher inflation. Uh, Cases where the higher tight inflation is used nothing but whenever there is higher inflation or uh, or higher inflation, nothing but higher inflation be caused by the interest rate, uh, higher interest rate or decreasing the money supply, making nothing but it's making expensive borrow and encouraging the investments. In the case of the tight monetary policy, it will it will make encourage the investments and making expensive borrow. Okay, this approach helps for slow down the spending and consumption and business investments, lead to leading to slower economy, but bring down the general price. How the prices works? Nothing but central bank uses this monetary. This is one of the mechanism to restrict the money supply. Nothing but it rise the interest rate. One of the mechanism, it will make the loans and credit more expensive for the consumers. Okay, this impact the inflation and sell the government securities. Government securities nothing but government will sell one of the securities, right? SGVs or any other government bonds. Okay, and it will hold the larger resource. Okay, and impact of the after controlling these impact, and it will reduce the inflation. The primary goal is to control the prices by decreasing the demand. Okay, and slower the economic growth, and higher employment higher unemployment is the impact. If we do this kind of the things, the reduce the growth, and it will impact the reduce the inflation, slower the growth, higher the inflation. It's used. It's a majorly nothing but referred to the actions that central bank take the limit the inflation. Nothing but to it's a mark a line of the inflation and overheating of the economy. Okay, it's also called as tight monetary policy. Is also called as a contractionary monetary policy. Is nothing but a contractionary monetary policies typically occur when the keep the inflation under control. Okay, it's if there is a too much spending and borrowing the consumers and the economy has overheating